Okay, so is the after hours session right now, and I want to go over a trade that I took. I took a couple of the trades that and I always a decent mover. I actually missed a lot of opportunities today as well. Very unfortunate for me. I am going through homeschooling, and I got a couple of kids. My wife is helping, or I'm helping her, I should say, with two of my children. She's taking care of, and then I am taking care of my daughter. So she's sitting next to me every single morning, next to my computer setup, and I'm trying to do the right thing, but focusing on her, focusing on me, and all of these things all over the place are not easy to manage, I have to say. This afternoon I was able to see this ALT biotech company coming down, and I saw the pattern and I figured it was a probably decent entry. We see a bear flag pattern formation of 5 minutes right here, and then a little flush where we started to print a little consolidation on the 5 minutes, ascending channel formation. And I saw that opportunity for an entry under the $12.40. You can see here $12.41. I hit it, got fill at $12.40, and I was looking for a test of the daily pattern, which I'm gonna take right here so you can see it. You can see how we got 985, we got 1175 and $12.27 on the daily. And what I want to show you here is how to use this type of levels for entries to try to get the lowest risk possible and get a decent entry using support and resistance levels as a target. For example, I exited this trade with a stop limit order to get me out on the flush after I got in at $12.40 as an entry, because the low of this candle was $12.41. When I noticed on the 1 minute that we were printing this formation, look at how we came and test that $12.49 half dollar, $12.49 half dollar, and started to consolidate, started to print smaller numbers, smaller meaning smaller candles coming down, 1245, 1244. So I noticed that there was a little bit of congestion right there, and we have a 1244 low, 1244 right here, the same one if you notice on the 1 minute. So when this candle started to come down and we were going towards the 1241, I hit a limit entry. I hit the bid at 1240 and I got filled right there on the spot, right? Started to come down on the 5, and we had a 1 minute micro bounce right here that had a high of 1235. You can see 1235 rejection, and came down to retest that level on the daily. I again exited this position with a stop limit order to sell. I put a trigger price at 12.27 with a limit at 12.26. We had a limit right here 12.26, and I hit it right there, got me out. Thankfully I put it right there because exactly at the low we printed a hammer formation on the 5, and we came right back up to retest the prior highs and follow through of that ascending channel formation on the 5 minutes for that consolidation. Again, the reason why I chose to get in on this as a short trade into the close was because I noticed the bear flag pattern formation that was coming from this highs coming down as overall trend was bearish, printed a bear flag pattern formation on the 5 and gave us a consolidation with a ascending channel formation at the break of the 1241 prior low or the 5-minute candle. I hit the bid at 1240, got in and was looking for a test of the $12.27 on the daily. That is a trend line that you can see here, and that's exactly how you can recognize the patterns to get entries and exits using support and resistance for your advantage.